Hello and welcome to another episode of the Invested American Podcast. I'm Allie and obviously my son Alexander. We're here today to have a great show. Thank you so much for tuning in and just being a part of this episode with us today. We want to thank our subscribers. We want to thank everyone that watches, and we want you to please share and like this with others. Alex, how's it going with you today?
Good, I'm doing great.
Okay. How's everything going for you in the last week?
It's been going good. Been really busy.
Yeah?
It's been a successful week, though.
Okay, well, I'm proud of you. It has been, and I'm just proud of you on your consistency and, your continued hard work. So I'm just proud of you. Here we are even doing this podcast. My daughter, Theory, said, I'll do it anytime. And we're trying to get some episodes recorded. And Theory said, well, let's just do it at 7 o'clock in the morning. And then, nobody had an attitude about it. Everybody, just going back in the text, all right, if that's what we got to do. I mean, it's just exciting to grow with Alexander, grow with my daughter, Theory, but to grow this organization and to just see what has evolved and what has gone on in such a short time. In today's episode, Alexander and I wanted to get into life insurance and talk about this subject a little bit because it's interesting to me the way life insurance is spun, and I think somehow it's created some confusion. What I mean is, what's a burial plan? What's Social Security protection? What's final expense? Well, I want to get a term policy. Well, I want mortgage protection. All these different terms for life insurance, but at the same time, it's like, is it all really different?
I mean, it's all life insurance, term insurance, whole life insurance, burial, final expense. It's all round about the same thing. It just depends what the client needs, right? So if someone's 65 or older, probably looking at some whole life insurance would be smarter. Sure. And then for someone that's a lot younger, maybe an index universal life and IUL or, a term plan.
Absolutely. Depending on what their purpose is.
Right.
I just think sometimes it's like I was at a client's home the other day. And really the purpose of this episode, and I really want to make mention of this, is to really dive into some of this a little bit and give our viewers, if you're a new agent, some content to understand some differences of life insurance and have a good dialogue with Alexander about that today. And at the same time, what I want is for clients or viewership of just people that are out in the market looking for life insurance to just see this episode as something to just give you maybe a better understanding of how these products are so similar, and sometimes it's just a marketing, I don't want to call it a gimmick, but a marketing way to create an opportunity. And, obviously through this discussion, you guys will hear that. It's the first one I want to dive into with you as we're talking about this is like term insurance. I've got term insurance on myself. When I purchased it years ago, and I'm obviously in the process of, just looking at also different type life insurance policies now, as you and I have talked about. But, I've got term insurance, and the purpose I bought it for at the time that I bought it is all four of y'all were still young. All four of y'all were still in school. And, Shelly and I were still, working on making a living and responsible for you all. So I figured that, heaven forbid, if something happens to me and I die, there's got to be life insurance set up for the family so everything can still go in order, right. Whatever expenses need to be incurred and need to be handled, right? So it's like, that's why I purchased term insurance at that time. And I knew I was buying an insurance policy that had an expiration date. What I meant by that was it's a 20-year term. That means that if I outlive the next 20 years, the policy doesn't pay. All the payments that I made are gone. Mm-hmm. Now, there's riders where you could put something on the policy where you could get all your premiums back if you outlive the policy. But I didn't purchase that. I wasn't worried about that at the time. I'm still not worried about that. But the greater thing is I had that coverage. Right. And I did it for that purpose, right? So that's how I did it. I knew what it was. So today when people, and I know you've made many, many calls and you've sold a bunch of mortgage protection insurance, it's really term insurance at the end of the day.
Right, yeah.
But what do you think makes mortgage protection like a more exciting opportunity? Or how is, not that it's so different, but why do you think it changes the game and it helps create an opportunity to talk to a prospect?
Yeah, because I feel like everyone needs some type of mortgage protection, especially when you have a house and that type of thing. But it's like you said, it's selling term insurance, but the client is kind of under the impression that we're doing mortgage protection, which we are, right? We're helping them cover their mortgage, and that's most important. They're not looking for term insurance; they're looking for mortgage protection, right? So that's the product that we're selling, right?
Absolutely.
So I mean, it's kind of the same thing, but when we're talking with the client about it, it's just straight mortgage protection. And I think it's exciting to sell the product too, because it's just different from selling regular term or whole life insurance.
See, I love that. I love the fact that you say that. I'll say that about the mortgage protection. I do. When I've been on the phone with somebody and we're talking about the purpose of the call was, we got a lead, and the lead was about mortgage protection. They're always excited to talk about, we just bought this home. It's about timing. But if you talk to someone and say, hey, would you be interested in term insurance? The first thing might be like, no, I don't need that. But when you walk someone through, hey, listen, you're buying a new house, you just got a new home, and you want to make sure, heaven forbid, if something happens to you, that you have coverage so your family could keep the home. Buy a policy that is good for the next 20 years or 30 years. That's how long your mortgage is for. And then you'll have that money upon your death. And then when you think about the fact that when you're paying your mortgage every month, that means that the total that you owe is going down every month. Mm-hmm. So if it's going down every month, that means when that, heaven forbid, something happens and the person passes away, there's even more money left, Mm-hmm. So, I'm sorry, I thought I might have cut you off. Were you going to say something else about the mortgage protection? Yeah. So, I know that's a big one in the term market, and you'll hear a lot about mortgage protection. So, if you're looking to protect, making sure those payments are made, mortgage protection is a great plan in the term space. And then there's decreasing term, where every year the amount of the death benefit goes down. So it's usually, your premiums are a little bit lower, but if you wanted, let's say, $100,000, right, for 10 years, it could be a decreasing term where you still pay the premium every month. But this year it's $100,000, next year it's $90,000. Again, I'm just making up numbers here, it's just as an example. And the next year is $80,000. So it's just decreasing year after year.
Right.
And then people get kind of a reduction in the premium.
Right.
So, cool. Well, I know a space that you sell a lot in, and I've sold a lot in and helped a lot of clients out, is in the whole life insurance space, right? So, whole life insurance is life for your whole life, right? That means that the premium is constant, and that means that the death benefit's constant. Now, when you sell whole life insurance, what type of whole life insurance type of products do you typically sell?
Well, I feel like at some level, whole life is just whole life.
It is. Perfect. Love your answer.
And I'll just sell different carriers depending on how their health is.
Yep.
If they're really healthy, I'll go here. If they're not so healthy, there. And if they're not healthy at all, then I'll go there. All right.
And when you say there, you're talking about the different carriers. Right. I know who's best fitted for those clients. Perfect. Yeah.
And so I'll do that, and then that's just really how I figure out what company is good for the client.
Yeah.
Right.
Absolutely.
And when we're working, our main part is whole life insurance. I mean, we can help out with term, we can help out with IULs, whatever it is, but we're mainly focused on 65 and older, right? But we can do everything else. It's just the point of us getting in homes, sitting down with these people and helping them out with, getting some life insurance.
And finding the right purpose, going through the needs assessment, and figuring out for the client, and that's obviously a common practice that we do at the Invested American, is when you sit down with the client, you go over a needs assessment, right, Alex? So what we're going to do is we're just going to make sure we know what their current situation is regarding if it's their health insurance or if there's some holes or gaps that we need to help them with. I know you're a big fan of United National Life. I talked to Hunter Gordon the other day, and he said that he is good to do a podcast with us, so we'll have him on. I know it's a product that you sell a lot of in the health space, but I don't want to deviate. Let me get back to the life insurance stuff. When we're out in the field today and we're meeting with clients, we sell burial insurance, right? That's a common one, but that's just it's final expense, so it's a smaller type whole life policy. Mm-hmm. Another one, we sell Social Security protection. I know that's something that we've talked a lot about now with clients. We're bringing that up. And then there's final expense, and that's a purpose, which is similar to burial plan, which is really in the same umbrella with Social Security protection. What do you want to touch on any of those points?
Yeah.
Let's bounce some of that.
Social Security protection was something that I picked up from SWAT, from Pete Fournier.
Yeah.
And he said it's not really a thing, but it is a thing, because when you're talking with the client and they want to make sure that their Social Security check's protected for the following year on passing of the husband or wife, they would receive their check for the whole year, or they could receive half of the check if the premium's a little high, so you might have to bring that down. It's a game changer for sure, because you're telling the client that you're going to receive their check, which you are, right? But it's just going to be through a policy.
Right.
And then the client's like, well, you're saying that I can receive their check for a year? Yeah, you can. Let me show you how it works, right? So then you kind of go through the whole process, show the client how it works, and then, it's music. It's music.
It's music to their ears. Yeah. It really is. I love that. I think what we're saying here to everyone listening is that with the final expense space, it's really about looking at the need or the void. When we're talking about Social Security protection, someone will say, hey, you know what? We already got the burial taken care of. When we die, we already got a thing set up with the cemetery. Everything's good. Okay, great. When one of you passes, do you have protection just to know that there's going to be a change in lifestyle because there'll be less money coming into the home? Because, one person less will be receiving Social Security, so there'll be one less check. No, I didn't think about that. Okay, I guess that's what I'm saying. It's not that, your spouse completely takes up everything that they make. It's, it's shared. So you can get some life insurance to protect you that next year as you readjust with what's going on. Right?
Yeah, that's kind of a good way to pitch it. Just kind of like what you said, helping cover bills and things, upon passing, because there's a lot of things that you're going to need to, take care of, when Mr. or Mrs. Jones passes, So having that plan is going to help protect, you from, having to scrape more money out and stuff like that.
Yeah. And I think that's the biggest thing. It's about finding the needs, setting those things up. And then you have obviously your indexed universal life insurance policies, which are really life insurance policies. They're really permanent type life insurance policies that have a cash value component to them that really help. And then there's also annuities, which also live in more of an investment space for single premiums, where you can put money in and create opportunity to grow in investment type strategies like the S&P 500 or the Barclays. Did you say, was there anything else that you wanted to say about life insurance at all? No. Okay, I appreciate it. We want to just make some things simple, and just highlight what core things about life insurance all seem like, look like, and get a little understanding. We thank you all for tuning in and taking time out. Thank you for plugging into the Invested American podcast. Please share, like, and subscribe. Thanks to Theory, Alexander, and everyone watching. We'll talk soon.